Welcome to Chapter 5 of ETU's free Mastermind CRT Bootcamp. As you can see in Chapter 5, we're getting a little bit more advanced into these topics. And you can see how we're using the previous chapters and using it in the new chapter. And I'm saying, keep on building it up, right? So we're adding the, Chapter 1, Chapter 2, Chapter 3, Chapter 4, and adding it into our Chapter 5, right? So it's slowly getting advanced and using our previous chapter to our brand new chapter, and we can have a better understanding, a smoother learning experience, right? And when I say and that's what I said in my Discord channel. That will be not random chapters. It would be a going from easy to advanced, right? So the chapter not random. They're designed to have a smooth learning experience, right? So get to our topic, daily range. As you guys know, this is not my PDF. I'm not gonna be talking about it. I'm not gonna be talking about if it's not a PDF or not anymore. Get straight to the charts, right? Not to the charts. I mean to the topic here. Dealing ranges, and it's a top chapter 5. It's about dealing ranges, right? When price takes out both swings high and swing low, right? When market takes both swings high and swings lows, and has an expansion on the swing, that particular expansion swing is considered a dealing range. So when the market, it doesn't have to be a swing high, swing low. It could be both, right? It could be high and low. So when the market takes out a high and a low, so you can see my cursor, right? I don't know if you guys could see it, but probably not, right? I'll show you guys in a chart, right? And eventually we'll show it in here as well if we go, as long as that PDF. When the market takes a high and a low, eventually does a true expansion from that low that he took out one of the either side market, and from the expansion is considered a daily range. A daily range is divided into two halves, gives us a discount region, the lower half, and a premium region, upper half. So premium and discount. And as you guys know, you always want to buy in a discount and you always want to sell in premium, right? Which is very important concept. You guys know when you're buying in premium, you're buying movement, you're practicing the buy in a premium spot is worse because it's in a premium area, so it's better for you to sell because market stop losses, the pips are not gonna be huge difference, because if you're buying a premium, your stop losses are gonna be hectic. That's why you want to be selling in premium and buying a discount, right? We'll be talking that later on. A dealing range is similar to a PD array matrix, but it's for expansion swings, right? The PDA matrix is basically, you're combining, PD arrays and stuff like that. So now go to the next chapter. You see discount key levels. So the, lower regional is discount key levels. Upper is, premium. And the half is equilibrium. So market, anytime it goes to premium here, it should have a reaction, right? It goes below, like around here, she is a deep premium. When deep discount, so market could, explode out of here, right? But right when tap this around here, say that the discount key level right up here, it could reflect out of it and, make it go high, right? And simple as that. Dealing ranges and PDA metrics, right? And you can see key levels. It talks about key levels. Let's go to the next chapter. Next, whatever the fuck it's called. Dealing ranges plus market profiles. Bullish order flow equals and bearish order flows, right? If you have a premium key level plus expansion, but it's a premium key level, right? So if you go back to the previous chart, it's a premium key level, right? So you're buying in this case, you're buying, right? So if a key level around here, you're buying here, right? But it's a premium key level. It's not a discount, right? But your order flow is bullish, right? Market taps the key level, you won't have a significant move. At a lower time frame, it may look like an expansion, but a higher time frame, it may look like for a retracement. So market will tap it, retrace, expand, right? We're going to get later on to that as well. Discount key level plus expansion equals reversal. This is the one you want to be trading. You for this, if you can't trade it, you can trade it, but don't expect a big move to happen. Expect a quick in and give quick out, right? Now let's get to the market and get to another chart. Bullish drawn liquidity. So basically, bullish market is going up constantly. Plus bullish dealing range plus market profiling, right? Based on time frame alignment. So if you have an hourly key level, your market profiling is going to be in a 5 minute. If you have a 4 hour, 10 minute. If a daily, hourly, right? Simple as that, right? As you can see, market took out a swing low or a low, and then market took out a high, right? So from this low to this high, this is discount, this is premium. and this is your PM key level. So right when the market expands or downside, tap the PM key level, right? Now, when you can take a long here, right? But don't expect a long above the premium key level. Don't expect a long above here. Expect a little retracement. So market goes up. There might be a high over here. Let's just say market creates a high here because of expansion, retracement, another expansion, right? Market creates a high here. Just go for the high or go for the CRT high, right? But don't expect to go all over here because this will be considered as a low time frame reversal slash expansion, but high time frame retracement. So in a higher time frame, hourly time frame might be a retracement, but low time frame it might be a reversal size expansion. So you might get juked out. So just when you have a premium key level, don't expect for you to go all over here, right? So now that's that. Now go to the next chart. So if you're buying a premium and you expect to go over here, guess what? You don't have a stop loss because, as you guys know, it's a premium key level, right? Then eventually this another expansion happened because it will be considered as a higher time frame retracement, right? Although a lower time frame might be a reversal, but higher time frame retracement. So higher time frame does another expansion to the downside. So after a retracement, it's two outcomes: consolidation, plus expansion. So the market expand. You want to avoid any moves to the upside inside the expansion until you tap the discount key level, right? Then over here, market taps a discounted key level. Just say there's another fair value gap here, or relative fair value gap here, right? IFG, tap their IFG. Eventually, from its IFG, you're looking for a higher. It's gonna be considered a higher time frame reversal and a lower time frame expansion, right? So you're able to trade it a reversal right over here. You can see reversal, and eventually you could look to go along to this retracement profile right over here to the high, or you could go to that premium key level, which you should definitely get hit, right? So you guys know. I'm gonna go to the next chapter here, and let's just say you have let's just say you have another FVG market just expands all the way to the FVG. But straight away trade that because after expansion, tapping a key level and especially a discounted key level would considered a reversal, right? Because there won't be no more inflation here because market tapped the key level while expanding to the downside, tapping a key level and a discounted key level as well. So now you could look for a reversal trade to the upside, right? So now let's look for a bearish order flow plus bearish drawn liquidity, right? Discount key level plus expansion equals a higher time frame retracement. Lower time frame, it might be a lower expansion. You can see lower time frame expansion, higher time frame retracement. A premium key level plus a expansion equals a higher time frame reversal. So this is the bearish order flows is bearish and drawn liquidity is bearish as well, right? And let's get into it, right? You can see market first of all took out the high, then eventually took out the low. From this high to this low is considered a daily range. When the market does not take out a high or low, be careful because it might not be considered as a daily range, right? So you want to get the right daily range here, and as well. And this PDF doesn't talk about the expansion swing, and keep in mind there is an expansion swing on this as well. I don't think I have actually found it, but look later on we might see it, right? You can see you have a key level in a discounted region, which you don't want to buy. If you're selling, you want to sell in premium, right? You want to buy here, right? So market taps at the premium key level. So expansion, tap a premium key level. Lower time frame might be a expansion, that's reversal. Higher time frame is going to be a retracement, so market retraces at a higher time frame. Tapping that low, so that low should be getting out, right? Eventually from here, next one could be expansion. So if you would have taken that, you would have lost, right? Because market would have eventually expand back up and go into a premium key level, eventually been down, right? So you would have had a loss. That's why, and if you're selling a discount, you want to get out quick, right? You have a day or two to it, right? Because over here, took out the high, it took out the low, daily range here. There's equilibrium. Now this right over here, the PM key level, market expands. You don't want to buy it. You don't want to set an expansion profile. Taps a key level, right? Eventually, after tapping key level, it could be two outcomes: consolidation or reversal, or consolidation slash and then expansion, right? You can see how we're taking the previous chapters, chapter 1, chapter 2, and chapter 3, putting them all together. Chapter 1, we talked about market profile. Chapter 2, we talked about what? Key levels. So you can see we're using all of them. There's a key level here. Chapter 3, we talked about how to use them, integrate the key levels price market profile. Chapter 4, we talked about time frame alignment, right? You can see based on time frame alignment, we're using all that together on chapter 5, right? So we can see we're using the previous chapter to help us out. This is why it's important you guys don't skip the chapters. Either the first couple of chapters might be easy, but once you get later in the chapter, if you don't understand the earlier chapters, it can be hard for you to learn on this mastermind that we have, that we are hosting by ETU, right? You can see you would avoid this, you would have traded this straight to the downside, and eventually got to hold it to these lows, which is over here, to the consolidation phases. Eventually got to hold to the discount key level, because a true expansion would happen from your own end, right? Daily range is used for building a narrative. So you can see me, you can see my live trade, right? It's always used for me to build a narrative. So every time I use it, it's always built a narrative. It's not used for me to take a trade out of it straight away. I use all the concept I'm teaching in this mastermind in ETU. It's all used the live market. You can see me use daily ranges in the live market. You can see me use what do you call it? Typical ranges, time ranges, CRT ranges. You guys see me all these, like, everything I'm teaching in these mastermind CRT bootcamp hosted by ETU is all, and everything I teach here, I use it in live market data as well, right? It's used to build a narrative, and this is very important. It's used to build daily ranges are used to build a filter. That means knowing that if you're buying, right, that premium key level will not cause an actual expansion. You might do a little bit move up. Eventually, that discounted key level will cause an actual expansion to the upside. So that's why it's called a filter, right? And it helps with drawn liquidity. Basically means that, saying this high right over here, just right over here, when it taps this key level, right? This high would be considered drawn liquidity, because when market reaches the 50%, market will usually expand. So like the drawn liquidity over here, right? You see, it's helping with the drawn liquidity as well. So it's very important, right? Every topic I teach here is what drives the market, right? And I got a very important topic for you guys as a gift, right? I'm gonna get that later on, not right now. And this is the other one right over here. And when my gift filter is gonna be later on the chapters, because it's advanced, right? Combining daily ranges with market profiles. So using time frame alignment, right? Your higher time frame is going to be daily range. So for me specifically, your daily range are not going to be in the hourly, not 15-minute. It's specifically going to be on the 4-hour, not the daily. So since we're all of us that you guys are watching this ETU's free mastermind CRT bootcamp are all all of us are a intraday / day traders. So using a daily range on a daily, weekly is useless. You only want to use it in the 4-hour time frame, because 4-hour time frame is the main time frame for a intraday / day trading. And you guys just said right over here, lower time frame. As I said, every time you tap the premium key level, lower time frame might be expansion, but higher time frame might be retracement, right? So you can use lower time frame as a market profiling, right? So that's profiling, right? Market profile, so that's profiling, right? It's going to profile what type of outcome should this give us, right? And it's used as a filter, used to build a high time frame narrative, used for targets, because I said beforehand, it's used to manage risks appropriately. So if you're buying, the drawn liquidity is bullish and the drawn liquidity is bullish and the order flow is bullish, right? And when you're buying in a premium area, say let's say a premium key level, using this to manage your risk. So you know that it might not cause a true expansion. So you manage your risk, getting out early. So basically preserving capital, right? Or eventually another expansion happens on the downside, tapping key level. Then eventually you can manage your risk one more time. Now you might be like, okay, this might go do actual expansion and hold to the high of the being mentioned that, right? And now let's get to the charts and talk about it like that. And I'm talking about how you can spot it right here, right? Let's talk about it right now. So a premium and / discount would be like this, right? So you can see a low got purged. This is very easy to spot. Low, swing low / low got purged. Swing high / high got purged, right? It doesn't really matter. It could be both, right? It could be either, right? Once this low gets purged, to this high gets purged, everything here is a discount. Everything is a premium discount, right? So you can see market has the discount. What did the market do? Push right back up, right? Reflected out the discount area, right? And you can see this auto block, which is right over here. Did it cause any big moves? No, right? But the discount area it did, right? So this is why it's very important for you guys to keep in mind. In the lower time frame, might cause a little expansion to the upside, but a higher time frame might be a little retracement, but it's another expansion to the upside, right? The downside, eventually tapping the pre and discount key level, eventually going back up right here. Eventually, you can see this side got disrespected, so you look now it's kind of from this side right over here. So now everything from here is a discounted area. Everything here is premium. This is discount, right? So when I sell here, when I buy here, you can see this fair value gap got used multiple times. You can see this fair value gap right over here in the lower time frame, which is that premium key level, caused this move to the downside that tapped this this discounted area, right? So premium to the discount, eventually discount area still hold it off. So market goes back up here. So every time you're selling around here with this order block right over here, right? It did fill because of the discount area, and market somewhere over here it was a bad price action because of there was the FOMC happening, right? So you can see discount area got tapped, pushed up, right? You can see this fair value, which was right over here to the buy side, right? You're buying. You don't want to buy this because this did cause a lower time frame expansion. That's reversal, higher time frame retracement. Eventually, guess what the market do? Push all the way back down here, right? Tapping this fair value gap, eventually, expanding from here as far as the fair value gap is respected, right? Eventually, market took that high out, right? Eventually, you can see this order block that got created right over here, right? I think it was pretty sure this one, right? You can see how this order block got respected because in the premium area you want to sell, this want to buy, right? So this order block was a high probably order block, and you got tested because around here you don't really want to be buying around here, right? Because you're in a premium area, right? And this is not a good time to trade because some days are bad, some days are good, right? You can see right over here, this order block I used is in premium. This caused a big move to the downside, and you can see right like just like that, right? Premium discount, right? You can see once the market went back in a discounter here, this fair value gap reflect out of it, type of premium caused a move back down because the higher time frame is bearish, right? Low time frame might be bullish, but the higher time frame is bearish. So this right with this good actual premium key level was the actual move to the downside, right? You can see this side right when it gets side, market never presses it back out, right? So that's what's very important for you guys to mark out this key level, because if you want to long this key level, you would have got to prolong this order block right over here, which is not a premium area, which is in premium area, and you don't want to buy in a premium, right? Want to sell in premium, want to buy in discount. So the premium are gonna wrecked, right? And discount, when you're selling in this premium area, right? This order block, right away to the downside, right? So that's why it matters so much. And let's go further more on how to spot this on, right? You can see market took out a high, took out a low. Basically from here on end, high to this low that gets created, it's considered a daily range. This low got respected, so this from here to here, it's called considered daily range. So this order block, the fit threshold of it is considered to be a what? A daily range. I mean, it's considered to be a discounted area, right? So the threshold is your discounted PD array, right? And you can see if we're shorted this fair value gap, you're gonna wreck because in the premium, right? I mean, it's a discount. What you want to sell in discount, right? You want to sell in premium, right? So once the market had the premium went down, right? Eventually, now let's show you guys the other concept of it: a expansion swing daily range, right? This will only happen if the market taps the 50% mark of this expansion swing. You can see when the market, now you have a clear drawn liquidity, right? On this, you have a clear drawn liquidity. Your clear drawn liquidity to the downside right over here to this daily range low, right? You can see clear drawn liquidity, right? Clear. As I said, it helps you with the drawn liquidity, right? You can see right over here, it's helping with drawn liquidity. This right over here is helping with drawn liquidity, the low, right? So that's why it matters so much. It helps you with filters too. So knowing to pick the right PD array. And let's talk about our favorite other topic here as well. This is going to be our expansion swing. So another thing. So this one would not cause a market to take out a high and a low, or a swing high or a swing low. Eventually doing a swing expansion and making a daily range. This would be a one where the market only when the market already creates a daily range here, right? Market pressure at the high to the low, made a daily range here, right? After the market retraces to the 50% of the daily range, basically to the equilibrium. So if your sales here, the 50% equilibrium, right? And this is premium, there's a discount, right? Because our high time for your bearish. Once the market has the premium, in this case, your sales, right? And it's at the equilibrium. After that, when the market does not need to do another, pushing out a high and pushing out a low, it can just do a quick expansion swing, and whatever the low that there is, that would be considered as another daily range, right? From this side that tapped the 50% to a low that gets created somewhere around here, That was not a legitimate. That low did not hold it off. This low right over here did hold it off, but market never retraced. Eventually, it would do until you see a good actual legitimate low here. That low didn't hold it off. This low right over here did hold it off. You can see it did it tap it. Nope. Eventually, we'll go until you see an actual dealing range here, right? Now, this low did not hold it off as well, so you're gonna go to the right over here. So now from this is called the expansion swing, right? Sometimes this might be wrong, by the way. Keep in mind, this might be wrong. Sometimes it be right. So it's kind of tricky because market gonna do another project liquidity and make another dealing range, right? So that's why it's important, right? But this is accurate right over here. You can see this kind of area you wanna buy, right? This kind of area you wanna buy, here you wanna sell, right? So everything, as you can see, every time it does that fair value gap here, you reflect out of it, right? But right when it tests that discounted premium area, such as equilibrium, what does the market do? Boom. And this will be considered as a expansion swing dealing range, right? There's two types of dealing range, right? There's one that's like this, right? There's one that, see if we can get here. There's one that just carries a high here, right? So there's a low, there's a high. Market purges out the high. You see right here, market purges out the high. So market has a dealing range here, purge out the high, right? Market purge out the high, kind of back down. Go to retracement. Purge out the low. Eventually from here to here is the dealing range, right? So now there's your dealing range right over here. Oh my god, I hate the lower this shit. Oh my goodness. This right over here is the dealing range. So everything here is discounted period, right? Right, the market retaps this. Now, when it does the equilibrium, when it does another true expansion here, to be considered as a expansion swing dealing range, right? So from this, how to tap this key level would be your dealing range again. So what the market taps this again, the discounted area, right? So there's a little higher time for retracement, lower time frame reversal. That would be not a good move to take. Boom. Eventually from here on in, market has another expansion to the downside, right? And this is called a expansion swing. It's not showing the PDF, but this is what I found out throughout looking at the market. As you guys know, this happens every day, right? This happens. Everything I'm showing you right over here happens in the market every single fucking times, right? You see, it's happening here. These concepts I'm teaching you happens in the market, so don't be stupid like, well, this is not an actual concept. It's proven, right? Hey, thank God I didn't have to do my back testing on this concept because it would take me years, right? Thank God the creator of this concept did it for us. You know, to do it, he spent decades. We're glad to do that, right? We're glad, we're happy about that, right? So normal dealing range, and there's an expansion dealing range, right? Where market expands, that's 50%. Eventually, there's another expansion to the downside, right? You can see it happens in the market. Everything I'm teaching you guys in this mastermind happen in the market. And these are the best concepts, by the way. These are not random concepts. These are not your random ICT concept that he makes. He makes random concepts every single day, which are not proven. This doesn't have decades of, being in the market, showing us decades of results, right? And the one I'm teaching you guys has decades of results, and they're high probability concepts, right? Which are from all of them from ICT. Dealing ranges are from ICT. CRT are not from ICT, but it's his ranges, right? But his student Romeo refined it, right? Shout out to Romeo for the ICT for the CRT concept, right? This is what we're talking about. That's why we're talking about a CRT bootcamp. Sing about CRT and everything like that, right? Then chapter 5, dealing range. And if you guys are ever new, make sure you guys watch the previous chapters because they're very important. And if you guys new here, today's bootcamp, join my Discord for more information. Join my Discord, join my Discord, be part of the family, be part of the mafia, be part of the, everything. I don't want to say too much. I don't want to be nagging. And yeah. Thank you for watching. I'll see you guys on the next chapter. Make sure you guys are studying, make sure you guys are taking notes, and make sure you guys are, learning. You don't get the videos I'm uploading, rewatch them until it's second nature. Because if you don't rewatch them, there's no point of you doing this whole thing. If you don't take notes, no point of you taking this whole thing because these happen every single day. right? This information I'm paying you, this information I'm giving you for free. I had to pay thousands of dollars for this, right? I have to pay fucking for every information. Weekly profile, I didn't find out for free. I have to fucking pay some fucking guru to teach me how to fucking find this shit, right? Eventually, I got it, right? So now, everything I'm teaching here are what gurus make you pay for, but I'm doing it for free because I love you guys. And these are the actual accurate one, except that TGRs give you some fucking bullshit ones. These are the best. These are the best concepts you should be learning. Don't use just random ass concepts. The one I'm teaching are the best ones, right? They're proven and they happen every single day in the market. They happen every single week. They give you a higher probability. As you guys know, probability matters in the market a lot. Sometimes market might the setup might work, sometimes might not work, right? But focusing on higher probability will do you better in the long term. So take notes, don't get to rewatch it, and whoever made it to this part right here, people after the first 2 seconds for the first 3 chapters, people don't get it. People usually like to quit. We made it this far. Congrats. Let's keep going. We have a lot of chapters to recover. So I'll see you guys in the next chapter. Peace out.